it's time for a real conversation. You're a buyer, you want to buy a house, you got a pre-approval for a mortgage. Phenomenal work. Time to get serious though. There are 5 major things that under no circumstance you should do once you've gotten your pre-approval. I'm Lindsey Johnson, your resource for all things real estate, and stay tuned because I'm going to give you all 5. All right, I'm diving into real talk today because what we're about to go over is completely preventable. So when you know, you do better, and I want to make sure that when you're buying a house, you do better. Once you've got your pre-approval, which as a refresher is when a bank or lending institution gives you a letter telling you what type of loan and what your budget is. That is based on your debt, your credit, your job history, your income. So if you go around and start changing things, they're gonna pull that same report right before closing, and if any of it's changed, I hope you can renew your lease. I said I'd dive right in, so I'm gonna dive right in. Number 1, do not open or close any credit cards. By inquiring to get a new card or potentially closing a credit card, you're changing your debt to credit ratio, which is going to be a real problem when the lender pulls that again just a few days before closing. So I know it's very tempting to want to save 10% at Target, but wait until after you have the keys, because if you open that card now, you may not be opening your front door later. 2, while we're on the subject of credit cards, let's talk about credit card balances. Don't max out your credit cards. You really want to keep things relatively the same from when you originally got your pre-approval. So if you've got a credit card that has a $15,000 limit, and when they gave you your pre-approval, there was only $1,000 on it, and then the day before closing, they see $14,000 on it, it's not only going to raise my eyebrows, it's going to raise the lenders, and it could be a problem. So keep your balances paid and make sure they're paid on time. Number 3, do not change jobs. If Karen at the water cooler is a total psycho, I'm sorry, but you're gonna have to deal with her for at least 30 to 45 more days. Because generally when it comes to loans, you've gotta have at least a 2-year job history. So if you quit your job, the biggest thing to remember is even if they've done your pre-approval, they're gonna confirm it again right before closing. So do not quit your job until everything is finished. And then you can tell Karen to go pound sand. Jumping into number 4, avoid any large deposits into your account that are non-payroll. So if you have a great job and you make bank, well, congratulations. But if something happens, for example, you get an inheritance from a relative, or somebody's gonna gift you some money, talk to your lender before that lump sum hits your account, because that's gonna be a major red flag to lending institutions. So you wanna make sure that you're depositing it the correct way, or if it's gonna be a problem, you'll deposit it after the house is closed. Last and certainly not least is number 5. And this one comes with a story that will haunt your dreams. No major purchases. And that includes, but is not limited to, cars, boats, RVs, basically any major purchase that pops up before the house closes is going to make your loan approval disappear faster than flat screens on Black Friday. Let me tell you a little story. This story was circulating around my office when I first started in real estate, and I've never forgotten it, and I hope you won't either. Picture this, closing day. Big table, sellers, buyers, seller's agent, buyer's agent, everybody's super excited. Well, the lender walks in, has a terrible look on her face and says, "Mr. and Mrs. Buyer, did you just get some new furniture for your house?" And then the buyers are all excited and they say, "Yeah, we went to a furniture store and got an entire house worth of furniture. All the beds and dressers, everything's gonna be delivered tomorrow." And then that terrible look on the lender's face gets even worse because she says, "Did you open a credit card to get that furniture?" And the buyers, still not knowing what the heck is going on, are saying, "Yeah, they offered 0% financing, so we're gonna have like 5 years to pay it off, and we're gonna have the entire house furnished. It's gonna look so great." And the lender just looks even worse if that was possible, because she says, Mr. and Mrs. Buyer, I can't give you your loan. By opening that credit card and maxing it out, you changed your debt to credit ratio, so I'm so sorry, but you no longer are approved for this loan. And can you imagine having a giant delivery truck bringing you a house worth of furniture and you've got no house to put it in? I'm telling you this story because it's memorable and because I never want something like that to happen to buyers again because they didn't know. Because when you know, you do better. And when you're buying a house, I want closing day to be a really happy day for you. So remember, don't open and close credit cards. Don't max out your credit cards. If you're gonna change jobs, you're gonna have to wait until after closing, no matter how obnoxious Karen gets. If you've got a big deposit coming in that's not payroll, clear it with your lender first, and no major purchases because you've made it this far. So make sure you can finish it and have a great home to move into. You can do all the furniture shopping after. I hope this video was helpful and I hope it keeps you from making any drastic mistakes. If you liked it and found some value in it, be sure to like and subscribe. And if you haven't gotten your pre-approval yet, check out this video on how exactly you can go about doing that. I'm Lindsey Johnson, your resource for all things real estate. I'll see you next time.